Now let's talk about crossing the spread. Okay, so what even is the spread? So the spread is just the distance between the best limit buy and the best limit sell. So the gap between these two, that's what the spread is. If I try to limit buy higher than the best limit sell, I'm going to be crossing the spread. If I try to limit sell cheaper than the best buy, that's also crossing the spread. Now I'm going to show you how this looks like. So you can see here that, let me just draw a line, horizontal line at the current price. Below this price are a bunch of limit buy orders, as you can see here. Above this price are a bunch of limit sell orders above here. So you can't limit buy higher than where price is, and you can't limit sell below where the current price is. If you do actually do that, what's going to happen is you're going to cross the spread. Now, whenever you're crossing the spread, this is the exact same thing as executing a market order. So even though the button that I've selected is limit order, if I do it higher than whatever the best sell price is, and then I click open long, it will, because I have, let me just change this 1 second. There we go. So now I've crossed the spread, okay? If I do it in the opposite direction, I'm just going to show you that as well. I'm just going to close out of this immediately. There we go. Oh yeah, quick tip, if you press the X button on the chart, it's going to market close you out of the position. If I want to cross the spread in the opposite direction, so I'm going to select a limit buy price, which is much lower than the best buy. Position size, 10. Open short. Oh, what just happened? Why am I not in a short? Let me try that again. Huh. Okay, 1 second. There we go. There we go. I'll explain what these are in a second. Okay, so I've crossed the spread and you can see that I had to pay market order fees. So I didn't pay the cheap fee of the limit order. I had to pay a much bigger fee. It's three times bigger. Now, when you're trading on the low time frame, sometimes when you're trying to execute a limit order that's really close to the current price, there can be a really quick, let me just close out of this trade. There can be a really quick price movement, and this can accidentally cause you to cross the spread when you didn't mean to, and you're going to pay a higher fee than you meant. To prevent this from happening, when it says here time in force, you want to just have this set to post only. Okay, have this set to post only. I think by default, it's also going to stay as post only. For most exchanges, this button is actually turned off. I think for BitUnix, it's turned on, but you just want to double check that you have post only enabled, because what this does is it prevents you from crossing the spread. And the way that it does that is, in the event that you try to limit buy higher than whatever the best limit sell price is, your order just isn't going to go through. Oh, let's try that one more time. So I'm selecting a price much higher. It says order place, but you can see nothing actually went through. The reason why it went through last time is because the price actually jumped up, right? But if let's say I select a significantly, like an obviously higher price, $10. So I'm trying to buy at 82,000 when the price is 81. If I click open long, it's just not going to go through. You can see here. Okay, let's say I make it. Yeah, it's not going to go through. It's going to cancel. I don't actually know if it's going to show in the order history that it canceled. Let's take a look. Yeah, so you can see here the status is showing as canceled, and the reason why is because I was trying to buy at a significantly higher price, or just at a higher price than whatever the best limit sell is. So make sure that you have post only enabled. This is going to save you a lot of a decent chunk of money that you could maybe lose by accident to unnecessary fees. So yeah, to wrap this up, what is the spread? It's the difference between these two prices, the best sell and the best buy. Whenever you cross the spread, this is the same thing as a market order because you're going to be taking liquidity away, right? To prevent you from accidentally crossing the spread, just make sure that you have post only enabled. When does it actually make sense to cross the spread? The only use case for this is if you are trading with very large sums of money and you say, let's say you have a trade idea and you say something like, I want to buy literally all the Bitcoin that is currently available and I want to buy it now with the money that I have, and I'm willing to take everything that's for sale, but I'm going to limit myself to a price cap of 81,400. So for example, right, hypothetical example, if I was to say I want to buy $10 million worth of Bitcoin and no higher than 81,400, and I click open long, what's going to happen is I'm going to eat through all of the limit sells up until 81,400. And let's pretend that there was, let's say 5 million in limit sells up until this point. So I eat through all of that. And then once price gets to 81,400, there's going to be a giant $5 million order. So the leftovers of this 5 mil is executed as a taker. And then 5 mil is just going to be sitting as a limit buy order at 81,400. So that's like basically the use case, like when you would actually need to go and cross the spread. It's when you want access. It's when you want to take all the liquidity up to a certain point. But if you're watching this video, it's unlikely that you actually need to be thinking about crossing the spread. So for that reason, just have post only enabled and all your stresses and problems will go away. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include like total combined within these two guides. There's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.